Good afternoon. My name is Scott Redler, the Chief Strategic Officer of T3Live.com. Welcome to today's recap and look ahead. So it was definitely an interesting day. I know I came in, I think, with 7-8 longs, and things to me were looking pretty good. And then all of a sudden, boom! You saw the headline. Apple to, the EU and Ireland, whatever. 13 to 14 billion dollars, which was a really big number. So in my head, I'm like, ooh. What have I seen that might have the same ramifications? I remember a month or two ago I saw 3 to 5 billion by Facebook. Oh, and I'm long it. It's been up for 3 days. And then Google looked good starting yesterday. I was keying for it to break out above maybe 800, 801. I'm like, wait, EU has a lot of things against Google. Maybe Google could be a problem. So right away I'm on get my cautious hat on. But then I'm like, oh, Baba, you know what? Chinese company, ADR, no tax ramifications, good technical setup. Maybe that could work and not have, the stresses. Or even Netflix. I've never seen them, open up headquarters in Ireland to, not pay taxes, whatever. So these are the things as a trader you think in your head, and these are the things that I write in my note. If this happens, do that. If that happens, do this. And, for me, I'm pretty risk averse, so I kind of act and ask questions later. So, before we get into it, first things first, you look real quickly at the S&P. Kind of eerie feeling to me. It's just been really, really choppy. I know that here is, the move above, 2100, but really since it made this one peak here, it's just been a choppy mess. Look, green day, red day, buy high, down, sell lower, up. Hit the 21-day, make a quick little new high, come back in, quick little new high, then go back to the 21-day. It's been just, if you're frustrated because you're trading the spiders, I could see why. It's been a choppy mess, and I'm not sure, if that continues or what that means. All I know is, today we did get below, 2170 by a tick. Actually, we matched it and then closed, a little bit off it. So the range continues. So I wasn't really that worried about the S&P or the spiders. I was worried about my positions. So first things first, before I even came in the morning call with Facebook down 20 cents, I'm like, that's not so bad. I could get out of a little bit there. Then all of a sudden, boom, it was, it was flat. So I'm like, all right, let me revisit this. So anyway, Facebook, just to give you my thoughts, I got out, relatively well. And at this point, it's still not game over. What did it do? It came in, tested this 8-day moving average. It was day 3 up, so I was a little lighter anyway because I always sell into day 3. I don't add on day 3. And at this point, hanging in there. But for me, I'll wait and see a little bit more. It wasn't as compelling as when it showed relative strength on, on Friday when the market hit a doji and gave you a breakout, the prior day. So we'll see what happens there. For me, Google, my history with Google is not great. It's a little loose and wide. You look here, it looked as if it was set up, ready to go, perhaps a nice, bull flag, which it's still fine. It still kind of looks that way. But, I was playing, my thought was I want to play this for a breakout move above 800. I am going to cheat and buy a little bit beforehand just in case it goes. I'll have a good mark. So when I saw the news, pre-market, I sold a little bit, and then I'm like, okay, let me give it a little space. Gave it a little space, but then said if it goes negative, I'm out. It didn't break, 787, and it did close at 791, but for me, I was like, who knows where it's going to go? Okay, so if you look at the first 5 minutes, it was definitely a lot of back and forth. So this was your, open lower, first bar, oh wow, looks okay. And then to me, once it started breaking below all these tails here, this was my out. So I think I got stopped out right around this 794-ish because I'm like, you know what? I'm not sticking around. There's no reason for it. I'm playing for it to get above here. Doesn't look like that's happening anytime today. So on this, you could have sold some and salvaged it. That's why I talk about salvaging. And then here's when you could have got out. And it did go as low as 789. It closed fair, and it's still not game over. But I'm just trying to tell you my thinking as a professional trader. Now at this point, I'm not so sure, so I'm going to wait. But then I also had Baba. Baba was a little different story for me. I was prepared and I was ready, and and I was like, okay, I'm going to go after this right away. And I actually started buying it earlier. When I got back on my desk, because I was thinking, okay, this could break above this, and I want to be involved. So anyway, this was one pivot. This was 95.45, and then another pivot right here was close to 96. So my buy was if it can clear this double, this little area, that's my spot. So I came in with tier 1. In this spot, I actually, I bought more quickly. Okay, and then I got a little, and it kind of worked straight out. and then here you had a nice bull flag, okay, intraday, okay, got more involved there, okay, and then into this move I think I sold some, and then that's when I went to the gym, okay. I put a stop in on some of it if it were to break this uptrend, okay. Actually no, I didn't, I'm sorry, that's wrong. You know, I sold some into strength and I had some left over. I actually bought a little bit into you know, into the pullback into here, okay. And then I think what transpired is I got, then once it went sideways, you know, I called in and I put a stop in there, got stopped out, and you know, then I wound up taking some at the end of the day. But all in all, you know, quick move, nice bull flag, another additional move, nice and tight, another additional move, and then actually you see a tiny little topping tail there, and then basically right there on this wide range bar below the 8-day, the 21-day on the intraday chart, that was your, okay, let me just reduce a little bit, and then you had 2 bars and it never claimed it. So anyway, the daily chart to me still looks good. So I'm in it overnight, and my reason is because I still think it looks good. It broke above, it held, it showed relative strength all day, but that's how I maneuvered it intraday. JP Morgan, I've been in since Friday, I'm sorry. I bought it on Friday. It's been on my disclosures. You know, I added a little bit yesterday, and then I sold it right here. You know, it still looks good. It's come a long way. Lots of different patterns here. This was one move, another consolidation. Now, 3 days up, you know, into a tape. I'm not sure. I said, I'm just going to take the trade. Still looks good, though. Banks still look good also. And Goldman just broke above the 200-day. It's got ex-dividend, so if you feel like dealing with it, that's fine. And last week, my bank trade was Bank of America. Those of you on the VTF and in my notes, so I was a buyer here, okay, added here, and I think I sold it on this day, you know, as it went towards the $16 target. You know, and obviously I sold it too soon, which happens, but it is what it is. Still looks good, still considered like the, you know, the value bank, but you know, it's coming into, you know, it's coming into a little bit more resistance, and maybe it tries to fill this gap if we get a strong jobs report Friday. But for me, you know, I like it when it's calculated, buy in here, break out, let it go a few days, sell it, and then cry a little bit if it continues. Hopefully you're not crying too much. So then, you know, you have the gold and the miners trade, which I've been talking about for 3 weeks. I remember talking with Annabelle, will be coming on soon, how it's been erratic, loose, wide, to the downside. Take caution. We lost the 8-day, we lost the 21-day. Then I remember that down open, okay, we wound up breaking the 50-day and the intermediate trend. So not only did it do all those things, it wound up creating a bear flag for lower prices. What's a bear flag for lower prices? Let me show you. First things first, okay, I like to educate you besides guide you every day, okay. Right here, okay, was when I remember it opened up, closed on the 8-day, that shouldn't have happened. And then if you say, I'm going to stay in, it didn't break the 8-day, fine. Then what happened is it broke below the 8-day, you know, broke below the 21-day, got saved, and then closed below it, and closed below a pivot. This really was your momentum spot to get out. That was around 30. You didn't have to be perfect, okay. Then you have 2 different trends here. 2 different trends. One trend right here, okay, which also kind of correlated to my thoughts on breaking the 21-day. So this accelerated trend, some like me who follow accelerated trends get out when those break. Then a lot of guys are like, well, you know, I like to be a little looser. Where's the 50-day? I'm going to give it to at least to that. And I remember on Twitter, I put that chart out there. And I said, let's see how it reacts at the 50-day, which was right here. Not only did it break the 50-day, it sliced it with a vengeance. Okay, and then what happened? Okay, you had a bear flag, retest of the 8-day that wound up being resistance curling down. On the way up, it was kind of support here, resistance came in, and then boom, you know, all of a sudden triggered below recent support, and some would say this is your bear flag, pull bear flag, and it also wound up filling this gap over here. And at this point, it's not giving you really any signals to be long it. I'm sorry, you know. Momentum trend, intermediate trend, now you're just taking it day by day. There was a little red dog reversal here that gave you a day-and-a-half trade, but it got rejected. Okay, GLD also. Been trying to show you what to do here. This trend has been, you know, strong all year. When it got really tight here, okay, remember, I'm like, if it breaks below 127, take some, you know, some care. And it broke below it that day that the GDX broke. And, you know, basically, if you get a little bit closer here, what did it do? It lost the 8 and the 21-day there, gap down. I don't even know if this is real, to be honest, but you know, here couldn't get back in, or came back in and got rejected, and then also bear flag, down, sideways, couldn't rally up, continuation. Okay, now it's you know, almost a little bit below this 125, which was your next level here. So all in all, you know, you got to be careful when trends get, long in the tooth, especially when they get crowded, when everyone like who was saying it, all the major hedge fund guys started to talk about getting really long here in their filings. Well, boom, and now they're like, what do I do? And now you're on some pretty big support here, and you'll see, what could be next. Look at the size of this gap. I wouldn't want to be just sitting in there guessing. If anything happens tomorrow, you'll use 124.88 for a potential pivot. Goes below, comes above, get a trade. But to go home either way, just you're kind of guessing, especially since gold has such crazy overnight moves and it's lost momentum. So I hate to see guys get hurt. I hate to see stubborn things happen. And if you go on my Twitter, I posted charts as they happen, not just hindsight. I point out the hindsight after the fact to say, look, what are you doing? What's your plan? Why are you in this? Have a reason if you're going to be doing anything, against what the chart is actually telling you. Obviously, if you're a macro trader and you've been in it since the start of the year, you're giving money back and you don't care. Okay, that's fine. That's you. You wait for the 200-day. But again, as active momentum traders, we look at the 8 and 21-day. And if that gives way, you take caution. If you break the 50-day, then you really just become very tactical. So we'll see what's going on here. We have a few days left until Labor Day weekend. It's very thin. It's very choppy. It's very stock specific. Some things are hanging around and have been acting well. Some things, are out of play and not even worth your time. And some things are working. And it all depends where you want to look. Finally, guys got paid on Tesla. People want to say, oh, what happened with Tesla? How did it get so bad? Okay, how did it get so bad? Well, you know what? On this day when Musk came out with his tweet saying that he had a new product, didn't go over so well, it opened up, and here is your engulfing day to lose the what's it called, the 200-day. Then finally that was enough pessimism, to get people out who just lost faith, and then boom, okay? And a momentum name like Tesla that's overvalued and high valuation are only in play as a trader when it's above the 8 and 21-day like it was here, okay? But then when it breaks, like it did there, that was one signal that this trend was over. And then it went through a bit of a consolidation phase, not knowing which way it would break. And then what happened? Broke to the downside. Those are the technical signals. So anyway, at this point, I don't know if I think the week's going to get a little bit lighter, as far as volume. Tomorrow's the last day of the month. And then you have Labor Day with people leaving early. I feel like they can do whatever they want. So just whatever you're doing, whether you're long, whether you're short, make sure you have a reason, and then make sure you have a plan for the following day. Apple didn't really get crushed, but didn't seem like anyone was really in a rush to buy it. And we'll have to see what the news is going to be circling it. So I'm still in some call spreads. Remember, I sold those 110 calls on this doji right here, or this topping tail, and now I think that I would say it could have been worse today, but it doesn't mean you got to go out and be all in buying it here. The 200 days right there, and I'm sure there's going to be a bunch of debate going back and forth. So until it gives you more clarity, be in some options, because at least risk is premium paid and you're not caught. But all in all, the best trade was pre-marketed at 104, 103 half, and after that it was just a whole lot of nothing. And that's that. I'll be in the morning. Hopefully we'll be able to connect some dots, make some money. If you're here and you're not on the beach and getting ready for Labor Day, then you might as well have a plan. Talk to you soon.